Hello, everyone, and welcome to our webinar on 411 year-end closing. First, I would like to thank you for joining us. We have a very interesting session today. We will make it informative and enjoyable. Let me begin by introducing Negotium's team. I'm Sylvie Lachance, VP Managing Director of Negotium US, and I will be your moderator. We also have one of my colleagues, Carrie Brooks. Carrie?
Well, hi everyone and welcome. My name is Carrie Brooks and I'm a senior consultant here with Negotium and have been so for about 3 years. My background is in accounting and operations and I'm happy to be sharing this information with you today.
Thank you, Carrie. In today's webinar, we will share our experience and best practices to achieve a successful year-end. The session will last about an hour. First, we will do a very brief presentation of Negotium, and then we will go into the actual presentation. Please note that this session is being recorded and all attendees are on mute. If you have any questions, you can go on the right-hand side of your screen in the chat box. We'll answer most of the questions at the end of today's session. Negotium is unique in its offering of a full and complete Microsoft environment for the mid-market. We have offices in Canada and in the States and have been a Microsoft partner for over 25 years. We are Gold certified, have been a member of Microsoft President's Club for many years, and are also part of Microsoft Inner Circle. Negotium offers a complete range of solutions and services such as Microsoft Dynamics GP, Dynamics AX, Office 365, CRM, Microsoft Azure, SharePoint, and several other applications that we have developed. We can also help you with services such as upgrades, implementation, managed services, integration, and training. We really are a one-stop shop. Before starting our presentation, I would like to ask you a first question. So take a few seconds to answer the question. What version of Dynamics GP are you using? GP 2010, GP 2013, GP 2015, GP 2016, or others? Please take a few seconds. All right. Thank you very much. So we see that 5% of the attendees today are using GP 2010, 10% are using GP 2013, 26% 2015, 52% of all attendees are using GP 2016, and 7% are using others. Thank you very much. Carrie, all yours.
Well, thank you very much, Sylvie. So for those of you who are running GP 2013 prior to GP 2013, the screens may look a little different to you, but you will be able to access this information in the same format. So I want to begin by saying that we have a lot of information that needs to be packed into a 1-hour session. Some of the module information may apply to you, others may not. I'll only be discussing the distribution and the core modules today. If you're running any additional modules like fixed assets, analytic accounting, project accounting, and you need some month-end checklists, please let me know. You can email me after this. My email address will be on there, and you can email me, and I can send you these closing checklists. So in order to get through this, all of this information, I'm going to be doing something a little bit differently today. I'm not going to be interacting with Dynamics GP module at all. All of the information is on slides for you. The reason I'm doing this is that there is a benefit to you. At the end of this, all of the attendees will be sent a copy of this, and you can use it as a tool during your year-end closing. All right, so let's talk about sequence and timing. If you look at the screen right now, you can see that this is the order in which GP needs to be closed. If any of you are running a third-party or front-end point-of-sale application, you need to make sure that you've pushed through all of your data into GP before even starting to close GP. So some of you may be using, maybe pushing through purchase orders, sales orders, maybe even inventory transactions. So we need to make sure that we close this out first. From there, we're going to close out the distribution modules. Some of you may be using the distribution modules, others of you may not. If you are, you need to close those down first, as we can see that it pushes data through to the core modules over here on the right. And then finally filters down to the cash management window and into general ledger. Okay, and before we begin, I can't stress this enough. Please do a backup. Do not rely on the backup that happens every night when you leave and go home. Please ask your IT team to do a backup and name that backup pre-year-end close. That way, if something happens, we're able to restore it directly from there. All right, then. Let's talk a little bit about master posting and batch recovery. So what we can do is we can access this by administration, routines, master posting, and batch recovery. These are really important to check out before you start closing your year in GP. And you'll probably want to do this after you close every module, working your way down to the general ledger. This is going to help you. Maybe you have some transactions out there that are for the year you are closing that has some errors in it. We need to bring it back in, and we need to fix those errors and close them. And in the master posting, you're going to have a mixture of both your new year and your prior year that you need to close. But you really want to be cognizant of that and go in there and make sure that they're all closed.
Now, the distribution modules, before we go into that section, you will see a second question on your screen. And if you could please take a few seconds to answer this question. Do you have a front-end POS system in which transactional data is integrated? So do you have a front-end POS system in which transactional data is integrated? POS stands for point of sales. So yes or no? Okay, so we see that 57% of the attendees do have a POS, do use the POS, and 43% don't.
All right.
Thank you very much, everybody.
So this section right here is going to be talking about the distribution modules. For those of you that are not using the modules, maybe it's interesting for you to review, but we'll go ahead and go through it right now. The distribution modules are sales order processing, purchase order processing, and inventory. So the data that's within these modules may come from a front-end point of sale, or they could come directly from transactions within Dynamics GP. So let's take a look at the process. So right now we're going to talk a little bit about the sales order processing module and closing. There are no specific year-end routines in these billing modules, but we want to run the normal period-end routines. And these are routines that you would do anyway on a normal month-end basis. So the first one is the Reconcile sales and completed documents. And what we do with this is when you do a reconcile, what it's doing is it's going out and it's looking at the tables. And there are several tables in one transaction, and it's making sure that all the data is connected properly for you. So you're going to go ahead and do a reconcile sales document first, right here. And what will happen is it will print out a report for you so that you can see what was fixed as a result of this reconcile. Now, the other thing that this does is remove completed documents. If you're running prior to GP 2013, this will be in a separate window. But after GP 2013, it's all in one window. Now, before removing these completed documents, you can print the report first. So you would click on the Remove Completed Documents, click Report Only, and process. What it'll do is it'll bring you up a report that you can look at, and you can determine, yes, I want to move all of these completed documents. Now, it doesn't actually remove the documents, what it does is it moves them into history so that you have a clean, open table in your current year transactions in which to close. So this utility can be found under the Sales button, Utilities, Reconcile Remove Sales Documents. Okay, so I'm thinking that now is probably a good time to talk about closing your tax year. You need to make sure if you're using Dynamics GP for calculating any tax, whether that be a sales tax or in the US a use tax on the purchasing side, if you're using the sales tax module, you're going to need to think about closing out the year. Now, when do you want to do that? You probably want to do that after, if you're using it for both your sales order processing and your purchase order processing, we know that that information feeds down to your receivables management and your payables management. So I would make sure that you would close out your receivable management first, and then you would close out your payable management, and then you would close your tax year. The reason I bring this up now is because if you're running distribution modules, you want to make sure all of that information from your sales order processing or your purchase order processing filters down into receivables management and payable management. Now, what do we need to do before we close the tax year? We need to complete all invoicing and transactions. We also need to complete any purchasing invoices if you're running it for both. Again, like all the other modules, we're going to run a reconcile and we're going to run a remove completed documents, and then we're just going to close up the fiscal period. Okay, so closing the tax detail records. So this is where we're going to go to actually close the tax year. It's in the administrative area page under routines, tax year closing. So this is going to allow us to close the tax year. You can print a report first, which will let you know what it's doing, and then you can actually close the year. Once you close the year from the first time, it will show you the last close date. Why is this important? Because you only want to run it once during a year-end close. You don't want to run this after sales order processing and receivables and then run it again after payables. You want to decide at what point you want to close it at, and you only close it once. So what does it do? It actually takes the information and moves it from the current year to date into the prior period, allowing you to clean up these accumulators back to zero for the new current year. Obviously, this is important if you're running payroll or anything else. It also just helps with the reports that you're going to print out if you use them to fill out your forms for the taxing agencies. So we'll go ahead and move forward. All right, so now we're going to talk about the purchase order processing year end. Again, there are no financial transactions in purchase order processing until you've actually received the item into inventory, at which point an inventory financial transaction is made, or you invoice, at which an accounts payable is created. So what we're going to walk through is, here's just some housekeeping items, because remember, there are no specific year-end processes. These should be done on a monthly basis. You're going to want to close any unnecessary purchase orders. I'll show you how to do that. You're going to reconcile received, not invoiced report. You're going to remove completed purchase orders, and you're going to close the financial period. Let's walk through the steps. All right, so when a purchase order is completely received for the exactly for the quantity ordered, and a vendor invoice is matched to the receipts for the exact amount, the PO will automatically close. We know, however, that some purchase orders don't automatically close due to some differences in quantity ordered, received, and/or invoiced. If you have a purchase order for a widget, 10 widgets, You bring in 10 widgets, but the price is a difference. You adjust that price on the invoice. Now the purchase order won't close. So it's remaining open, and it needs to be closed and cleaned out. Another reason would be if you have a line item where 10 items were ordered and only 9 came in, and your purchasing agent decided, I don't want that extra widget, just cancel it. But it hasn't informed you, so you haven't updated the purchase order. The purchase order is going to remain out there. So the first thing we're going to do is we're going to run a purchase order status. And you can find this report under the purchasing area page, reports, under the analysis, and then pull down to purchase order status. At this point, what we want to do is we want to create a report that we can actually bring up and give to our purchasing agent to let us know what's out there that needs to be closed, that needs to be canceled, that needs to be followed up on. Maybe it is a legitimate open purchase order and they've forgotten about it. So this report will actually do it for you. You can choose the 4 options of a purchase order, and you'll see that a purchase order can either be new, received, released, meaning that the purchase order has been printed and sent off to the vendor. It can be closed. It can be in change order mode or canceled. So once we do this, we're going to click the print report, and then we're going to move forward. At this point, once you have the report, you're going to go ahead and you're going to give this to your purchasing agent. The next thing you're going to do while you're waiting to get that information back from your purchasing department is to print a received not invoiced report. You can find this report under purchasing area page, reports. Again, it's in analysis. You just have to pull down and click the received not invoiced piece. So what we're going to do is we're going to look at this report a little bit. What is this report telling us? This report is saying, these are the items that I have received into stock, but I have not yet been invoiced for. All right, so what are we looking at? We're looking at the quantity shipped and the quantity invoiced. What does this represent? This actually represents your accrued purchases control account. This column should total your accrued purchases. So you can use this report for 2 things. First, you're going to go ahead and give this out again to your purchasing team and let them follow up to determine whether we should have received invoices for this or not. And if we do, we need to get those invoices in before the end of the year and we close out our year. If they see something that says, oh, this isn't going to come in and the invoice was already there, we're going to need to make adjustments to the control account in order to get this to balance. The second thing this is going to do for you is it's going to actually allow you to reconcile your control account. All right? All right, let's move on. So once we have all of our information back from our purchasing department, and our purchasing department has told us that we need to close out some purchase orders, we're going to go ahead and need to do that. How do we do that? Well, we're going to go into the Edit Purchase Order Status window, which can be found under the Purchasing Area page, Transactions, and Edit Purchase Orders. Now, all of the line items in the PO document must have a status of closed or canceled. A line will be closed automatically when it has been fully received and matched to the invoice. We know this. If a line item has a status of received and you want to close it, you're going to need to change the line item to canceled or received. If not, it's going to remain inside your accrued purchases account. If the line item is not going to be received, it should be canceled. If they're telling you, hey, we're never going to get this in, go ahead and select your canceled down here. If you select released, it's going to remain open for you to process your receipts against it. So when all of the line items have been canceled, the purchase order itself can be closed. You're going to change the status in the header to closed. Right here, you'll see that you have the ability to close it, and then click on the process button, and then you close this. You're going to do this for every purchase order that needs to be cleaned up. All right, so once we've gone ahead and we've done all of our housekeeping and we have a nice clean table that has all of our open purchase orders in it with their correct statuses, we're going to remove those purchase orders that need to be pushed into history. It doesn't remove them on the long run, it puts them into a history file for us. So where can we find this? Under the purchasing button, routines, removes completed purchase orders. At this point, what you're going to do is you have the option to select just a certain vendor, or you can select all vendors. There are other restrictions in here that you can use, and those restrictions have to do by vendor ID, name, document date, created by. If more than one restriction is selected, only the documents meeting the criteria will be removed. The others will remain the same. So what we're going to do is we're going to go ahead, we're going to make our restrictions, and we're going to click process. This will go ahead and bring up a window that will process it and let you know that it has cleaned up and removed closed purchase orders from the open table. It will also print you a report that you can print for your records.
Okay, before you go there, Carrie, we just had a quick question. Aren't you curious to find out how many of the attendees are using POP to run this utility on a regular basis? So let's ask everybody. So how many of you that are using POP run this utility on a regular basis? So please select one. Either it's never, monthly, yearly, or I did not know I needed to. Please cast your vote. All right, so we have 2% of the audience said never, 34% said monthly, we have 52% on a yearly basis, and 12% answered I did not know I needed to. Carrie?
Okay, well that's really interesting. Yeah, thanks, Sylvie. It's really, really important that you run these routines. You don't have to run them monthly, but at a minimum, you should run them quarterly for a couple of reasons. The first reason is you're going to have a heck of a lot of work to do at the end of the year if you don't keep up with this. And the second reason is that it just keeps the tables clean. There's less of a chance of getting errant records out there, and it's just good table maintenance to go ahead and to run this at least on a quarterly basis. So in conclusion, what we're going to do for our purchase order closing list, we're going to edit the purchase order report, we're going to print it, we're going to give it to our team to let us know the information on what we need to close. We're going to close any purchase orders that can be closed. We're going to do a reconcile, not invoice report as well, so that we can take a look at the accrued purchase liability account. Then finally, we're going to remove the completed purchase orders, and we're going to close the fiscal period for the purchase order processing. And that's it for purchase order processing. Now on to inventory. So inventory, this is the last of the distribution modules to be closed. So when we get to this point, what we've done is we've closed our front-end point of sale and make sure that we've pushed through all of our transactions and integrated in everything. We've posted all of our sales and purchasing batches, and we've closed those modules. We have checked again to make sure that there are no batches in the batch recovery window or in the master posting. We want to check this after closing every module. Remember, also, you can have future period transactions before closing the year. You don't have to stop working until you close this year. You can have your people put their transactions in a separate batch that's called current year. And that way you can post all prior year, but keep the current year transactions open. Just don't post those transactions, or else it is going to affect your year-end numbers and the accumulators. So this is where we're at. We're down right here. The information that we put in here and when we close are going to feed directly to the general ledger. Okay, let's take a look. The first thing we want to do, because we've done this with all the other modules, is to reconcile. Again, this is in the inventory area page under utilities and reconcile. You have the option to include item history, which are fully completed items, and that would be an item when it was received in, when it was invoiced, and when it was sold. That all becomes history. I always suggest including the item history because you want to reconcile everything if you're going to do it. This can take a while, so you do want to do this. All right, what's going to happen during this reconcile period is that it's going to go out and it's going to check and make any changes that it sees. And it's going to, if there are any discrepancies in the open table history, the header, or the transaction detail. What may happen is if you are running serial or lot numbers, it may find that some of the items have been received in without those attributes. Now, in this case, what it'll do is it will auto-assign those attributes for you. It's very easy for you to fix those, and this is how you're going to do it. So once you end up processing, it's going to print out a report for you that tells you all of the adjustments that it made and the variances that are going to be created as a result of cleaning up this table. There may not be any impact. If there is an impact, it's going to automatically create a batch for you to post an inventory of those discrepancies and to get it in line with how it should be. So if you have serial and lot numbers, what you're going to need to do is it is going to give a lot number of auto create, and you're going to see that auto create through any of your lot numbers or your serial numbers. You simply have to go into the batch and you have to decrease the transaction, then you increase the transaction, and the lot number assignments and the serial number assignments will come up. If you have any questions on that, please feel free to email me. I do have some information on that for you. All right. So the next step is to complete a physical inventory count. A lot of people do this at different times. So what you need to do is, because this process is actually going to freeze your inventory, you want to do it during a time when no one is in the system, probably on a Saturday or on an evening, depending on how much inventory you have to count. Now remember, we've already posted all of our sales documents down, and we posted all of our inventory transactions in, and we have purchase orders have been cleaned up. So right now, nothing should be hitting the inventory on this during this open fiscal inventory count. People can still be working manually. I mean, if you decide to do this during the day and freeze it, your receiving people can still receive in the door. They just can't enter it into GP until you have completed this fiscal inventory count. All right, so how does this work? What you're going to do is you're looking, the first window you're going to go into is the inventory transaction stock count schedule. And you see that right up here. It will create, you can create as many stock schedules if you want. A lot of people create their ABC cycle counts in this, and they run them on a monthly basis. So you would have a stock count that says A cycle count, B cycle count, C cycle count, and they would run it quickly, and it may take only 15 minutes. The same process is used to do a full physical inventory count at the end of your year. So in this particular case, I have selected all of my inventory items and all of my sites. So at this point, I'm going to click the Start Count button. when I create the Start Count button, it is going to freeze inventory. Then I'm going to select Print. And at this point, I can print out my inventory forms. I can either give a worksheet, an individual stock count form worksheet, or I can do a complete list. You can then, once these are printed off, you can hand them over to your counters. What they're going to see on there is they're going to see, this is the item number, this is the item description, this is how many I show in stock, and this is location I see them, if you're doing lots, and a blank column for them to manually enter how many they physically count. So they're going to go through this process. Once they're done, they're going to be handing you back their worksheets, and you're going to go ahead and go into the inventory transaction stock count entry window and enter those transactions. So if you have an inventory that shows you have 10 in stock, and after counting, the counter comes back and says, I counted 15, you're going to enter that 5 additional in there, and it's going to give you a variance of 5. What's going to happen is it's going to create, when you complete your stock count entry, it's going to give you a batch with all of the variances in it. It doesn't post automatically down to your inventory. It allows you to go in and look at it and make adjustments if you need to. If it sees that there's a discrepancy with serial and lot numbers, you can take care of them at that point within that batch. All right, and once you're done with that, and you actually complete the stock count entry, and you click process, it opens back up your inventory for you and unfreezes it so that you can continue on with your normal processing. Okay, so in addition to what we've talked about, there are some additional reports for permanent records that some people do print, and then they scan them and they keep them. One is the stock status report. So after you've completed your fiscal inventory and you have everything correct, you might want to print that stock status report. Purchase order receipts report, a turnover report, transaction history, serial and lot number reports. All of these reports can be found under the Inventory and Reports menu. Once we've done this, we've got all of our reports printed. We're going to do an inventory year-end closing. So at this point, you have the option of removing discontinued items, sold lot attributes, sold receipts and costs changed prior to, and you have a date you can put in here. It's up to you whether you want to remove these or not. Now, there is a functionality here called Update the Item Standard Cost. If you happen to be running inventory valuation that is an averaging, then you have the option to click this button, and it will go out at the time that it closes the year and calculate the new item standard cost for you. If you don't choose to do it at this point, there is a separate routine that can do that for you. What you're going to do is go into Inventory, Routines, and Year-End Close. And then we are basically done with our distribution modules.
Well, thank you, Carrie. So before we continue with the core module, we have another question for the audience today. So how often do you do a period closing in both receivables and payables? So how often do you do a period closing in both receivable and payables? Please answer the question. It's either monthly, quarterly, year-end, or never. All right, so we see that 12% of the audience is doing it monthly, 28% answered quarterly, 58% at the year end, and 2% never. Thank you. Carrie?
Okay, thank you. What that tells me is that most of you are running your period end processes and you're doing it on a regular basis. The reason you want to do that is because if you're doing it monthly, you're finding any problems before you hit the year end. And if you were to only run these processes at year end, you are going to have a lot of work to do again. So we like to do this on a monthly basis. The other reason for doing these is because it updates the accumulators, your current year-to-date numbers, your prior year-to-date numbers. These accumulators accumulate based on your cleanup. So let's go on and see the core modules. What are the core modules? The core modules are the Payables management, the Receivables management, the Cash Book management, and your General Ledger. I'm not going to be addressing any other modules that you may have, like fixed assets or payroll. They have their own year-end processes that you're going to have to run as well, and they can be run probably before you start running your GL. So as long as you get those other modules closed out before you close out the general ledger, you're probably going to be in good shape. All right. So again, I wanted to talk about this tool, and I don't know how many people are using this tool, but it is the Reconcile Subledgers to General Ledger. This tool is available in GP 2013 for Payables management and Receivables management. If you're running anything higher than GP 2013, you're also going to have it for inventory and bank management, which is going to become really handy. What this does for us is it allows us to reconcile, to look at transactions in the receivable subledger and compare it against receivable transactions and any other transactions in the GL control account. This is a good tool for monthly reconciling your control account to your subledger. You would just choose here which module you want, and then you would also come in here and you would select the GL accounts that apply to this. So if you have more than one account that posts to a control account, you can put both accounts in here. What you're going to do is you're going to find it under the Financials, Utilities, Reconcile to GL. When you click Process, it is going to create a Excel report that has all of the information you may need on it. So, and this can be a working document for you. So I know that I kept this monthly in my monthly reconciliation folder so that I could show that I reconciled monthly to all my subledgers. This one happens to be a Payables transaction subledger. And what you can see is it has the beginning balances for the month, which are already off. This woman has a lot of work to do. And we have unmatched transactions, and there are no unmatched transactions. That's the good news. So the system is not seeing anything that is either in the general ledger and not in payables, or the other way around. There are potentially matched transactions in which you review, and I can see I have 4,400 here, I have 44 here. I'm okay, I see the combination, everything looks good here. And these are the matched transactions. So this is where they found everything. Once you reconcile your unmatched transactions, you may determine that, oh, I had a payable transaction, but for some reason it didn't post down to the GL. You can go back and see, is it still sitting there in an open batch, or maybe there was an error on it and it's sitting in batch recovery. Maybe I need to go out there and fix it, because you want to be able to have that one-to-one connection between the subledger and the general ledger. You wouldn't necessarily go out to the general ledger and just increase the value by that payables amount. You would want to trace the transaction. And then down here you have the reconciliation. So this tool will save you time in trying to find where you are out of balance, and should be used whenever you close your periods. So now we're going to take a look at the year-end process in payables management. All right, this is a big miss. Most people will come to me and they'll say, you know, I never close my year-end right on 12/31 because I haven't got all of my transactions in, or I'm waiting to do my fiscal year-end close. Well, this is kind of a myth, because what you're doing is, while it will let you close anytime you want to, unfortunately, if you don't close on the year-end date, your year-end accumulators will not be correct. Those pesky accumulators that show the yearly activity, they're not date sensitive. So if you close your year in January, and it's now going to move all of that information to the historical year or the prior year on your accumulators, it's also going to include those January transactions that you posted. So you kind of want to close the year out as quickly as you can so that you can use those accumulators. Let me go ahead and show you what that's all about. So what we're going to do is we're going to reconcile the receivable amount. First thing we're going to do is we're going to go into the sales, utilities, reconcile. This is payables amounts or sales amounts. And we're going to click all the documents. And like every other reconcile we've done with all of them, you can reconcile sales documents or print the report only, and then see what it's going to reconcile, and then reconcile. And then you're going to remove the completed documents. You can print the report first before it removes it if you'd like. Once you click the process, it's going to give you a report and tell you the completed documents that it removed. It doesn't remove them, it just pushes them into history where they should be. Okay? So there are other receivable period and tasks that we want to run through. We want to go into the sales transactions, apply sales documents. We want to make sure that we don't have any unapplied documents out there. Then we want to run an aging and review it and see if we need to make any changes. The other thing we're going to want to do is if we're doing finance charges, we want to assess those finance charges for the year end, and we want to post them if we create any. So any additional batches that you found from all of this above, you're going to go ahead and post. The other thing you want to do, if you're using statements, you want to print your statements, you want to remove fully paid transactions, and then print any additional reports that you want to print. All right. So again, I spoke about this briefly. There are two closings in both receivables management and payables management. One is the calendar year and one is the fiscal year. So the calendar year should be done as close to the year end, the calendar year end, as possible, because this is what is going to clear the calendar year-to-date finance charges, and it moves all of the calendar information into the prior year. The fiscal year close transfers all the amounts, and it actually updates the summary records of the vendors or the customers. So let's take a look at what I'm talking about here. If you see on this window, here's in this case, it's a customer, and this is the current year-to-date information. This is the number of invoices we've paid all year, the number of invoices that were paid. This is the number of sales invoices I've sent out. Here's our sales, our high balance. All of this is very important information if you want to do analysis, especially if you're over on the payable side. Your purchasing agent can use this information to determine whether they can get better rates from other vendors and negotiate better contracts. So that's why it's important to close this out as quickly as you can, at least on the calendar year to date. The other area you can assess is finance charges if you're looking at it. Now, once I run the year-end closing, it moves all of this information from the year to date into the last year or the prior year. Now you can start accumulating your current year here, and it's going to give you a life-to-date number. So it's very easy to walk in, to come into this window and see where you're at. And you can also see finances. If you're using collections management, it also gives you credit summary information. And that's it. So that's what we need to do. So now what we're going to do is we're going to run our year-end closing. And for this process, it's the same window. You can close either just the calendar year or the fiscal year. So you don't have the excuse to wait until your fiscal year to close your calendar year out. You can come in on 12/31 or 1/1, well, or 1/2, and close this calendar year. It's going to tell you the last time it closed so that you don't duplicate the year-end closing. You can also print a report and keep it for your permanent records. When you click process, after you're through, it's going to tell you. So the last closing date for this fiscal year was on 12/31/2016. I also closed my calendar year on the same date. You can find this information under Sales, Routines, and Year-End Close. The report should be printed afterwards and kept as part of your financial record. Okay, so let's run through the receivables management checklist. We're actually going to run a sales reconcile, apply the appropriate unapplied amounts, age the accounts, assess finance charges, post the finance charges, balance receivables to the subledger account by using the GL, print statements, remove fully paid and applied documents, print desired period end reports, and then finally close your fiscal period. Let's move on. So now a little bit about the payables module and closing. Again, we're going to use the reconcile feature. We are going to reconcile. You have the option to reconcile all of these different tables. One is the summary, the fiscal year, the calendar year, the batches, and the workflow status. What you want to do is you want to reconcile the summary information, the fiscal year, and the calendar year. You don't need to worry about these. And the option is to reconcile and to print a report, or maybe you want to print a report first and view that report and then reconcile. Again, you want to keep this as part of your permanent record. This is in purchasing, utilities, and reconcile. Okay, so there's a few other payable period end tasks. We can process we're going to go ahead and process all the payable transactions for the calendar year or the fiscal year. We're going to print the desired reports. Now, if you're in the U.S. and you are using 1099s, and I believe there's something in Canada as well for that, you want to install the payroll year-end update. Even if you're not running payroll, the reason you want to do that is the tax updates that you're going to get are going to have any updates for your 1099 forms. If there's no changes to the 1099 forms from the prior year, then you don't need to do this. All right, so then the payable year end, it looks exactly like the receivable year end. The report should be printed and it should be kept as part of your current record. Okay, so here's our year-end task list. We're going to reconcile the payables, post all the transactions, we're going to close the calendar or fiscal year, and we're going to close the sales tax period. Remember I told you that you have different areas where you can close this. I typically will close it after I've closed my payables. All right, so now we're on to the general ledger closing.
Carrie, we have one last question before you go ahead into the general ledger closing. So we would like to know, I'm curious to know, on average, how many days, months after the fiscal year end do you actually run the close of GP? So on average, how many days, months after the fiscal year end do you actually run the close of GP? So within 1 month of fiscal year end, within 2 months, within 3 months, or when I receive the accountant's year-end adjusting journal. Just going to give you a few seconds. All right, so we have 17% of the audience said within a month, 23% within 2 months, 32% within 3 months of fiscal year end, and 28% when I receive the accountant's year-end adjusting journal. So thank you. Carrie, go ahead.
Okay, thank you, thank you. So I am going to be discussing here later on my reasoning for having you close the fiscal year and not have to wait for the auditor's final numbers. But we'll go through this later on. So let's talk about general ledger. All right, when should I close my year-end in general ledger? Basically after everything else has been closed, because remember, everything flows to the general ledger. And now we have ensured that all of our transactions from inventory, receivables, payables, fixed assets, if you're any other third party, analytical, accounting, payroll, all of that information has been posted down to the GL. So we want to make sure that we go in and we check those master posting and the batch recovery windows to see that there's nothing else out there, because once we close this general ledger, we're not going to be able to close those batches like that. So once we've done that, we're going to move on. Okay, so what does the year-end process do? It actually closes all of the profit and loss accounts out to the retained earnings account, leaving the P&L accounts with a zero balance at the new year. That's what we want it to do, right? We want it to roll into retained earnings, and then when we have a new year, we have a $0 beginning balance for those profit and losses. Now, it also moves the open year transactions into the history table, and that's what you're seeing here. The GL 20,000 is the open table in your general ledger. It contains all of those transactions you see when you go into your transaction entry inquiry. When you look at an inquiry, all of those for the current year are in here. If you're looking at historical transactions from a prior year, they're all going to be in here. So that's how this process works. And the fiscal period tables are being updated to mark that the year is closed. Let's talk a little bit about retained earnings accounts. So there are two different types of configurations that we can use when we're setting up our general ledger. If you are running divisional GL and trial balances, you're going to have multiple retained earnings accounts by division. If you have just one retained earnings account, everything that flows from the purchase order is just going to flow into that one account. If you've got divisional retained earnings account, all those divisions' profit and loss information will stream over to that particular GL account. So there's mapping involved if you have a multiple or a divisional close going on. So if you've got divisional retained earnings account, there's a note that I want to make sure that you understand. You have to make sure that you have added a divisional P&L account for every division that you have out on your profit and loss and your balance sheet account. The year-end process will abort if GP is set up for divisional retained earnings and there are no retained earnings account for the P&L for that division. So it's very important. What you might want to do is you might want to create a Smartlist. One Smartlist will have all of the retained earnings accounts on it on your balance sheet side, and then another Smartlist will have all of the divisions on the other side. So you want to do a one-to-one comparison and make sure that those are mapped, because you really don't want to have your year-end abort, because then that backup that you did is going to come in very, very handy. Okay, so now what we want to do is how do you fix it if you see that you've got a problem on your GL account? So the other problem that we have, obviously, is if you have a balance sheet account, typically at the year end, it's going to transfer that ending balance to the beginning balance of the new year. And a profit and loss account is going to zero out and push into retained earnings. What happens if you've inadvertently created a general ledger account that is an actual balance sheet account and you've made it a profit and loss? When you do year end, the system is going to look right here. If it sees that this account is a profit and loss account, guess what? It's going to zero out and go into your retained earnings account. And you're not going to have a beginning balance going forward. This is a nightmare. And you do have to actually reverse your year-end closing if you want to fix that. So we really want to, as best practice, go out there and we're going to create a chart of accounts. We're going to create a Smartlist on our chart of accounts to ensure that we've got this posting type correct. And it's very simple to do. I'm going to show you right now. All we're going to do is we're going to create this year-end Smartlist. It has the main segment, the account number, the account description, the posting type, and the account category. You're going to verify that this main account segment is where it should be. It should be a balance sheet. So in this particular case, I know that my main segments between 1 and 399 are balance sheet accounts. I know anything after 4 is a profit and loss account. So you can actually use this by using the search criteria to find out for you quickly. Let's see that. All right. What I'm going to do is I'm going to go in and create a search criteria, and I'm going to say the main account is less than 4,000. What am I looking for? I'm looking for all my balance sheet accounts, and here they are. And now I'm going to check and make sure that all these balance sheet accounts have the correct balance sheet posting type. If it's incorrect, you just need to simply double click on this and go back in and change the posting type for yourself. I cannot stress doing this enough because it's going to save you grief on your year end. Okay, let's talk about the fiscal period window before you close your GL. You want to make sure that you've created your new year. If I am in 2017 and I'm closing my year, I want to make sure that I've created that 2018 before I try closing it, or else it's going to crash again on you. So you're going to want to do that. Now, when you're getting ready to close, what you're going to do is you're going to come in to your closing year, and all of these are going to be closed with the exception of your period 12. The financial module is going to stay open, because remember that year-end closing is going to create a closing transaction that is going to both post to the 12th month of the year you're closing, as well as the first month of the new year. So you want to make sure that you have that in order. Okay, this is a big myth that I like to talk to people about, and it's something that I was guilty of doing many years ago as well. I used to create a 13th period, so I could wait and put all my adjusting entries in that 13th period, and then I would have an easy way to be able to see it. I could pull my reports up with just the 12th period, and then once my adjusting entries in the 13th period would be in there, I could see them. And I thought it was a brilliant idea. Well, I kind of figured out in the long run I made a mistake, because what happens is anytime after the new year you run a reconcile, which is something we're always telling you to do, right, on that year, it's going to act and reattribute those postings to the earliest period with the same start date. It's going to take all of those 13-month adjusting journal entries when I reconcile and put it into the 12th month. So therefore, I've lost the ability to use that 13th month. So there is a better choice. And this is what somebody told me many years ago, and I always tell my people to use this. You're going to set up a source document number. And what we're going to do is you can go into Tools, Setup, Posting, and Source Documents. You know these little source documents. We never really think about them unless we're trying to reconcile something, and then we have to try and figure out what a CMTRX transaction is. So what I do is I put in year-end year-end closing. I create a source document that says ADJ, year-end adjustments, and I save it. Now what's going to happen is whenever I get the auditor's completed journal entries, I'm going to create the source document as an ADJ, not as a GL. All right? And then I'm going to be able to go ahead and look at this anytime I want to just by the source document number. And that is going to be a way for you to see it in your Smartlist and in your other reports. You can also use the cross-reference by source document report to view your adjusting journal entries for a time period. And that happens to be in the reports financial cross-reference source document. Okay, and that is going to remove the need to have a 13th period that is going to be destroyed the next year the minute you run Reconcile. Okay, again, before we close our batch, we want to double check for the unposted batches. Go into your batch recovery, go into your master posting, make sure that you have all of those years, this year that you're closing those batches done. Any single-use batches for the financial system should be posted. Use the master posting function under administration to check for the unposted transactions and check your batch recovery. Okay, so let's take a look. So this is our year-end close. Now this window is going to look a little bit different if you're running GP 2013. This that you're looking at is a GP 2015. And you can see that it now lets you know how far it is in the closing process. Sometimes you'd have to wait forever, and you don't want to close the year twice. You're also looking at a window that just has one retained earnings account. If you have divisional retained earnings, you're going to see a little bit different window. So you have the option to remove any unused segments in your GL that you're not using. And you have the option to either clear out inactive accounts or maintain those inactive accounts. Now you can close it with budgets or without. Now, in the new versions, we have a reverse historical year. Typically, before we have this capability, you would have to go in and have to have Microsoft reverse your year if you had an error on it. So where do you find this? Financials, routines, year-end closing. We're going to close the year. This is the year-end closing report. You want to print it and keep it for your records because you cannot recreate it. Now, again, we spoke about this earlier, and you can go ahead and close your year, and then when the adjusting journal entries come in from your accountant, you can use that ADJ source document, and you can post. It will post to the first prior closed year. It will update your retained earnings, and it will show the changes in your new year. So here's our steps. You're going to post all the transactions. You're going to make a backup. You're going to print the financial statements. You're going to print your trial balance. You're going to close the fiscal periods, and you did it. You're done. So if you have any questions, please let me know.
Great. Thank you very much, Carrie. So we have time just for a few questions. So we received a few questions from the audience. So I will repeat each question twice. Question number one that I have here, this one is from Sheila. I'm running fixed assets. Is there a special year-end close for that module? I repeat, I'm running fixed assets. Is there a special year-end close for that module? Carrie?
Okay, yes, there definitely is, especially with fixed assets, because the fixed assets, there's tax ramifications, obviously, on depreciation values. So you are going to run and close your fixed asset module prior to closing the general ledger. So yes, definitely.
Thank you. We have another question here. This one is from Robert. Robert says, so I can continue to post transactions into the prior historical year. How does that impact the beginning balances in the new fiscal year? I repeat the question. So I can continue to post transactions in the prior historical year. How does that impact the beginning balances in the new fiscal year? Carrie?
Okay, so Robert, what happens is when you close the year, it becomes a historical record. GP allows you to go back into a prior year. So you could make a transaction, you've closed your fiscal year, you could go into your journal entry window and you could enter a long journal entry for that closed year. What it's going to do is, if you open up the fiscal period for that closed year, it's going to allow you to post it in that year. It will impact, the impact of that journal entry will update your retained earnings account for that year, and it will also roll any changes into your new year. So your retained earnings will be updated, and if it happens to be balance sheet impact, your beginning balances will be updated correctly as well. Now you can use this as much as you want to, but you can only go back one closed year. Okay.
Thank you, Carrie. We have a question here from Lisa. Does the year-end update include any changes for the general ledger year-end closing process? So I repeat, does the year-end update include any changes for the general ledger year-end closing process? Carrie?
Well, I'm not sure of your question, but for the general ledger, no, it has no impact at all. What it will do is, if you're not running payroll, but you are printing your 1099s in the U.S., if there are any changes to that 1099 form, it will update that. But the impact to the general ledger itself, no.
Okay, thank you. And we have one last question here. This one is from Cheryl. Last year, I ended up having to contact Microsoft technical support to roll back my year-end. I had several GL accounts marked as PLN accounts, and they were actually balance sheets accounts. This was a costly mess. Is there a way I can do that? I can do this myself if it happens again. I repeat, last year I ended up having to contact Microsoft technical support to roll back my year-end. I had several GL accounts marked as P&L accounts, and they were actually balance sheets account. This was a costly mess. Is there a way I can do this myself if it happens again? Carrie?
I'm sorry, I know. That's painful. So I'm assuming you're running GP 2013 or prior. The good news is, if you're running, the good news is you can upgrade. And when you upgrade, remember the button that I showed you that says roll back your year-end close? That is what you need to do. You're going to need to upgrade if you want to do it yourself. Unfortunately, Microsoft won't even give us the information to help you roll back your year, because it is such a detailed process. There are hundreds of tables that it needs to impact. So if you want to save yourself any future monies or pain, you might want to think about upgrading, okay? Thank you.
All right. Thank you, Carrie. So we'd like to thank everyone, and we hope that you enjoyed today's session. If you're interested in any additional training on year-end closing or any other offering, you can reach us at info@negotium.com. So info@negotium.com. Thank you, everyone, and have a wonderful day.